Internal Capital Adequacy Assessment Process, ICAAP. The key aspects and challenges of capital assessment. Agenda. Introduction to ICAAP. Components of ICAAP. Risk types addressed in ICAAP. ICAAP implementation process. Challenges and best practices. Definition and purpose of ICAAP. What is ICAAP? ICAAP is an acronym for Internal Capital Adequacy Assessment Process, a critical evaluation tool for financial institutions. Capital Needs Assessment. The primary purpose of ICAAP is to assess an institution's capital requirements based on its risk exposure to ensure stability. Regulatory compliance. ICAAP ensures compliance with regulatory requirements, helping financial institutions to maintain solvency and stability. Regulatory framework and requirements. Basel overview. Basel provides a comprehensive regulatory framework for banks to ensure financial stability and risk management. Capital requirements. The framework outlines minimum capital requirements that banks must maintain to protect against financial risks. Internal assessment. Institutions are required to internally assess their capital adequacy to ensure compliance with regulatory standards. Key stakeholders involved. Senior management. Senior management plays a vital role in the ICAAP process by ensuring strategic alignment and resource allocation. Risk management teams. Risk management teams analyze potential risks and ensure that adequate capital is maintained to mitigate these risks. Internal auditors. Internal auditors assess the effectiveness of the ICAAP process and ensure compliance with established standards and regulations. Regulatory authorities. Regulatory authorities provide guidelines and oversight to ensure that financial institutions maintain adequate capital levels. Risk identification and assessment. Identifying relevant risks. Identifying all relevant risks is essential for effective risk management. This includes credit, market, and operational risks. Risk assessment importance. A thorough risk assessment is crucial to understand potential vulnerabilities and the impact on the institution's capital. Capital requirements determination. Determining the capital required to mitigate potential losses helps ensure financial stability and compliance. Capital planning and management. Importance of capital planning. Effective capital planning is crucial for ensuring that institutions maintain sufficient capital to manage their risk profiles effectively. Forecasting capital needs. Forecasting involves estimating future capital requirements based on projected growth and risk exposure to avoid capital shortages. Risk exposure assessment. Assessing risk exposure is essential in capital planning, ensuring that capital allocation aligns with potential risks faced by the institution. Stress testing and scenario analysis, evaluating resilience. Stress testing allows institutions to assess their resilience against potential adverse economic conditions and crises. Simulating stress scenarios. Scenario analysis involves simulating various stress scenarios to better understand potential impacts on capital adequacy. Capital adequacy assessment. Institutions can ascertain their capital adequacy and preparedness for potential crises through rigorous analysis. Risk types addressed in ICAAP. Credit risk. Understanding credit risk. Credit risk is the risk of loss arising from a borrower's failure to fulfill their financial obligations. It is crucial for financial institutions to manage this risk effectively. ICAAP requirements. The Internal Capital Adequacy Assessment process requires financial institutions to evaluate their credit risk exposure comprehensively. Capital adequacy. Institutions must hold sufficient capital to cover potential losses from credit risks, ensuring financial stability and compliance with regulations. Market risk. Definition of market risk. Market risk refers to the potential financial losses resulting from changing market conditions, such as interest rate fluctuations and changes in asset prices. Interest rate fluctuations. Fluctuations in interest rates can significantly impact investment returns and overall market stability, leading to potential losses. Asset price changes. Changes in asset prices can affect the valuation of investments and pose risks for financial institutions and investors alike. ICAAP evaluation. Institutions must assess their exposure to market risk as part of the internal capital adequacy assessment process to ensure financial stability. Operational risk. Definition of operational risk. Operational risk refers to the potential loss resulting from inadequate or failed internal processes, people, and systems, or from external events. Importance in ICAAP. Assessing operational risk is essential in the internal capital adequacy assessment process for effective risk management. Capital management. Institutions must maintain sufficient capital reserves to manage operational risks and ensure financial stability. ICAAP implementation process, establishing governance and oversight. Strong governance framework. A strong governance framework is crucial for the success of ICAAP, providing structure and guidelines to the process. Roles and responsibilities. Defining clear roles and responsibilities for stakeholders ensures accountability and effective participation in the governance process. Facilitating oversight. Effective oversight mechanisms are necessary for monitoring the governance process and ensuring compliance with established guidelines. Data collection and analysis. Importance of data collection. Data collection is essential for understanding risks and capital in the ICAAP process, ensuring informed decision making. Effective data analysis. Analyzing collected data effectively is crucial for accurate capital adequacy assessments and risk management. Informed decision making. Utilizing analyzed data helps institutions make informed decisions regarding capital adequacy and risk exposure. Documentation and reporting. Importance of documentation. Proper documentation is essential for maintaining transparency and meeting regulatory compliance standards within institutions. ICAAP process records. Institutions must keep detailed records of their ICAAP processes to ensure they can be reviewed effectively by regulators. Regulatory review. Thorough documentation prepares institutions for potential reviews by regulators, ensuring accountability and compliance. Common challenges in ICAAP implementation. Data quality issues. Poor data quality can undermine the effectiveness of ICAAP, leading to inaccurate assessments and decisions. Inadequate risk assessment. Inadequate risk assessment methodologies can result in unaddressed risks, undermining the ICAAP framework. Stakeholder engagement. Lack of stakeholder engagement can hinder the ICAAP process, making it essential to involve all relevant parties. Best practices for effective ICAAP. Integrating risk management. Institutions should embed risk management into their business processes for comprehensive effectiveness in ICAAP optimization. Ongoing staff training. Continuous training for staff is essential to ensure they are well equipped to manage risks and comply with ICAAP requirements. Open communication. Maintaining open communication with stakeholders is critical for effective ICAAP, ensuring alignment and transparency in risk management. Conclusion. Importance of ICAAP. ICAAP is essential for ensuring regulatory compliance and financial stability within financial institutions, guiding them in capital management. Managing financial risks. Effective implementation of ICAAP allows institutions to identify, assess and manage financial risks effectively, protecting their capital base. Maintaining adequate capital. Institutions can maintain adequate capital levels by adhering to ICAAP guidelines, ensuring long term sustainability and operational resilience. Thank you.